All right, got a lot to cover tonight. We'll get as far as we can get, and we'll call it a day, man. Hope everybody's doing great. It's nice to see everybody. Happy to be here. We're moving along, man. It's moving quick. We're almost in February already. Crazy, crazy, crazy. All right, so let's do this. Okay, welcome all my new guys. Welcome returning guys. Hope everyone's doing well. So we're into 2021. You know all this stuff. Oh, by the way, I am caught up. I'm working on this week. So from last Thursday, Friday. So if I haven't answered you from last week, I don't have it. I'll probably be caught up next day or two by the weekend for sure. So I'm in a good place with this stuff, but you know it never lasts. If I take a day or two off, you guys are gonna crush me. All right, so we're into the first turn of the quarter, man. It's flying by. You guys know how this stuff works. I start marking this stuff up, and next thing you know, I'm marking up December. That's how it feels to me anyway. All right, so look, 1, 2, 3. That's where we're at. Okay, so this is the end of your first quarter of your 12 weeks, right? And then we got 1, 2, 3. 1, 2, 3. I can draw, and then that's it. This is the end. So look, just as fast as this month evaporated, the next one's going to too. So here's the deal, right? We're going down the stretch here. You need to check your process control. We're going to talk about that tonight. I got some great plans we're going to go over and look at some stuff. I got some charts. We'll just get as far as we can get, man. I'm going to pick up exactly where we left off last week. I'm just going to buzz through these first couple of charts. But look, you guys should be reading the books. You should be, man, the book should be done. You should, I mean, first quarter, you should have both books done. I know it doesn't work like that for everybody, but that's where you should be at. That's your benchmark. By the end of the month, you should have the Jim Rohn book completed. And I hope you're listening to it at 1 1/4 or 1 1/3 speed, 1.3 or 1.25. He talks reasonably slow, so if you listen to him at a faster pace, you should be able to understand it. I talked about the reasons why we're doing that. Okay, we're still developing, right? We're developing this part, right? 3 classes, 3 weeks in. We're right on target. We're hitting our benchmarks as a group. All right, so you developed a plan, right? We got the ITTT approach. I'm going to talk about that a little bit tonight. And we're just going to move along, man. Okay, so motivation is what got you started. Habit is what keeps you going. So here you are. First of the year, you're excited. You make yourself some personal promises. You're going to do some things. And I know I'm going to say show of hands in the group. Are you guys still in a good place, man? Have you caved? Did you go off your diet? Did you unpromise, or did you cave on the stuff that you promised yourself you were going to do? That's the question. And if you did, okay, you're a week away from February 1st. Just get your shit together, man. It's not too late. It's never too late to draw a line in the sand and start. That's why I don't believe in resolutions, man, because you make this big, ridiculous commitment that you're going to do all this stuff, and then 2 weeks in, it's over. Just make a commitment every single day that tomorrow's the day. And just do it. Every day you get up, I'm going to do 5 benchmarks, 3 benchmarks, 1 benchmark, just something to get yourself going. All right. So being successful is repeating a process. Okay. We have the process. We have the process in here. So what's the process? You have to decide what process you want to approach the market with and how you want to approach your life. I'm trying to give you the foundation and the structure to make these things happen. Right? If you get up and you put your phone down and you don't promise yourself not to touch it, put it in cell phone jail. If you've ever seen those little cages, put it in cell phone jail till noon. Put some time lock on it. Let someone else take control of it if you can't get a hold of yourself, and not give it to you to a certain time of day, whatever it is, whatever you need to do. And make sure the person that you make the commitment to is strong enough not to cave and hand it to you. Whatever it is that's distracting you, if it's Netflix, if it's your phone, it's your computer, whatever it is, Instagram, Facebook, WhatsApp, whatever it is that's holding you back, you got to decide, man. Decide that it's time. All right, we're all supposed to be listening to the audio, should be moving along. We're building off the 12-week year in the Jim Rohn book. One of my favorite quotes out of the book is, become a millionaire, not for what the $1 million, but for what it will make of you to achieve it. What kind of person will you become on the road to being successful? You're going to have to dig deep, reach inside, look inside when things get tough, when you don't feel like doing it. You got to find what you're made of. And all of us are capable, man. Every single one of us, right? All right. I hate this stuff, but this is some housekeeping crap I got to handle. So here's the deal. We're having problems with GoToWebinar. It's been ongoing for a while. It's not something that just happened. Not everybody's getting the links, and it's not fair to the people that are not getting it, because most people are. So here's the thing. They're going in the spam folders. My support staff has been working on this issue, and here's the problem. This is the text directly from them. It's, the cause may be that your ISP or email provider is blocking GoToWebinar links because they use shortened links, right? They use like Bitly or something. Those are often identified as malware. So they reject them automatically instead of sending them to spam. And after so many rejections, GoToWebinar just takes it off the list and quits mailing it. It's a problem for all of us. So I got to figure out how to fix it. So chatting with them and chatting with my group and support is, I got to delete all the system links, man. I got to start from pure scratch. I got to issue a new webinar link and then mail it out. I don't want to waste time on all this technical stuff, but you guys need to know what we're going to do and what's going to happen. Okay, so I got to create a new registration. I'm going to post it in Skype and try to make you guys aware of it. So we got to delete the entire GoToWebinar system and rebuild the database. Okay, we've been using the same link for quite some time, so it should be okay. If you're brand new, you probably don't have to worry about it, but I'm going to ask you to re-register. So what has to happen is, I'm going to have 2 or 3 people working on this at the same time, because what's going to happen is, we're going to mail out, we're going to make a registration, you're going to register, and then you're going to be on standby. Then I got to go back, because everyone tries to pull one over. I got to make sure each person is paid, registered, and going before I approve them. So we got to go through the spreadsheet against the database and against the registrations. It's a pain in the ass, but what else can I do? I got to do it. All right, so that is going to be a problem. All students will have to be approved and re-registered. It's going to be a bit confusing for some, so I need you to work with me and give me some patience and a little help, man. If you know you don't belong, don't register. Okay? Now here's the thing that you can do on your end. Once the new link is issued, white label it, man. Put that you're allowing to receive mail from GoToWebinar and GoToMeeting. Allow it. Okay? And also go into your virus software and make an exception for that email address. Some of you are like, oh my God, how do I do that? If you don't know how to do it, what are you gonna do? But just forget it. Go into Norton, go into whatever you're using, AVG, whatever you're using, go in there, and in exceptions, paste this email address from GoToWebinar. It's that simple. What'll happen is, your virus will allow it, and your spyware, whatever you're using, should allow this stuff to go in. I know, thanks, Sean, I appreciate it. I know it's a pain, but a lot of people are gonna be freaking out. Okay, this is the thing. This is the thing that pisses me off. They can't guarantee it's even gonna work, but I have no other, I'm out of options. Okay, they said it's a suggestion, we can try it, it should work. But I'm hoping that it clears up the majority of the issues. All right, so please exercise some patience with us and try to work with me and help me out. So here's the deal. I'm going to announce it this week. I'm going to announce it next week, and I'm going to do it Friday night, midnight late. I'm trying to line up everybody to help out that's involved in the process. It's probably going to be like in the overnight hours, Friday night, Saturday, and into Sunday. Carr told me that I think he's not going to have a session on Sunday, so if we're not done yet. Okay, I know, Ed, that's not the problem. The problem is some people are getting spam. So if you don't have a problem, leave it alone. I know there's a lot of people getting them. You're here. But the issue is there's a handful of people that are writing in and complaining they're not getting the links, and it's not fair, man. Everybody's entitled to get the registration and get it handled. So I gotta take a stab at this. This is the only suggestion I have from GoToWebinar and GoToMeeting to fix it, and I got to see what we can do. All right, I'll keep you posted. I'm gonna post the registration. All right, and just bear with me, man. I think it's gonna be a mess, but I'm just hoping it's not. All right. February 6th, mark it down. All right, and if you could stop by the Skype chat and register, it would really help everybody out, man. Just drop in there, because then if you're not registered, right, the day of the meeting when Jim comes on Monday, you're going to go in the queue and you're not going to be in, and you're going to be freaking. All right, and don't forget, everything's recorded. If you don't get in, you can watch the recording 30 minutes after it's over. You know that. All right, appreciate you guys. Appreciate the understanding. All right, so we were talking about this probability that a 50-50 coin toss or draw of a card using proper money management and some basic stuff, some premises that we've been using in the charts for 10 plus years together. All right, and I was talking about how if you use slight edge and gaming theory, that the slight edge would be that you're successful 4 out of 5 days, 3 out of 5 days. All right, we talked about a cooler and how the dealers use emotion, FOMC, the market tank today, right? Why? If you follow the technicals, it's irrelevant. Okay, we talked about hybrid approach, turning stuff over, maintaining your slight edge, right? All this stuff, blah, blah, blah. I want to just get to it, right? Talked about the disciplines that you need to have for yourself. And the biggest one is not lifting your stop and taking the hit. Okay, so I wanted to talk about this stuff right here. Okay, you have to have a logical response to everything that is thrown at you in the business. You can't make the decisions under duress. That's the biggest thing. Things don't go your way and you don't have a response, right? It has to be proven. And when I say proven in the pair that you trade, it has to be homeworked and tested, or whatever you want to call it. It has to be a pre-worked out response to dealer behavior. How do you do that? Right? Just as an example, some guys are using 3 to 5% risk. They don't want to take the hit. So what I'm going to suggest is that maybe you go in with 2.5 or 2, and you come in on the second order with 3, and you aggregate in. All right, so let's say the dealer moves against your position aggressively. Vector outside bar, he vectors it again, or on the second leg, he breaks the high, and it looks like you're in trouble, right? Okay, you want to lift your stop. It's taboo, but you remember the response to that, right? The response is buy or sell the perceived stop loss level again. What's the perceived stop loss level? Say that real fast 5 times. 20 to 30 ticks, 20 to 30 pips, 25 pips, somewhere in that number, right? So what does that look like? What should your planned response be? Okay, you're trading. You got your perceived stop loss level, which is slightly above the high, right? Price comes in, does this. The dealer happens to flip the book and get absorption here. You're selling into this move right here. Your stop would normally be here. Dealer fades back in and breaks higher. Okay, you don't want to take the hit. You should have 2% risk here and 3% risk here. It still gives you the higher numbers, the 5%, but you're aggregated in. You're weighted higher on the top side order. And when the dealer pins you in here, then your stop is your full stop. Full stop is some number higher here. If the dealer moves in 20 pip swings in that particular pair, and that's going to be in the more aggressive pairs, GJ, EJ, the ones that have bigger swings, man. Not like Euro, CAD, Australian. If the dealer moves in bigger swings, then you have to figure out the number from homeworking where it goes. But the problem is this: If you're a 5% trader, you're a 3% trader, and you go all in on the first shot, right? If you go 5% in on the first pull and the dealer breaks the high, now what? You're going to go 3%, 5%. You got to average in. You got to aggregate in. You can't come in with 2%. It's barely going to move the needle on your aggregate. You need to go in, foot soldier, light. We've talked about this on and off for years. So I'm just using the 5% argument because it's 3 and 2. It breaks up easy, right? If you're trading 3%, it's 1 and 2. It's the same thing. You would come in 1% foot soldier, right? And you would back it up with a 2% aggregate. And what that would do is that would give you a weighted higher position. If you start playing with it, right, when you build an aggregate like this and you have 2% up here and 1% on your entry, right, it's a weighted aggregate. So what happens is when your line's here, it doesn't do this on MT4, but on other platforms, you could say, give me an average position marker. And what will happen is it'll take these two positions and give you a weighted aggregate of basically like 2/3 higher. So then your weighted average position will be much higher on the chart instead of a line here and a line here, if that makes any sense. So now you know where your aggregate break even is. Okay, so suppose you want to get your 3% on the trade and you're trying to catch the high. Okay, so then you just do the inverse. If the dealer doesn't take you out, right? If he holds true and breaks the apex nadir thing, and you only have 1% position on, then you look for the pullback on the break, and you could either add 2% or 1%. But you got to make sure you have a confirmed M formation or a W formation reversal. That's what that looks like. And then you get your stop out. If you're using MetaTrader and you have your first position, you want to get your stop covered in front of your first position quickly as possible. As soon as this moves a little separation, then you just have a 2% risk out. Or if you went 1 and 1, then you have a 1% risk out. It's understanding what to do not only when the setup shows up, but it's understanding what to do when things don't go your way. All right, I tell you this all the time. As I was in emergency services on the fire department, and there is absolutely prep work, training, and protocols, SOP for every single scenario that shows itself. But yet you'll walk up to your computer with your own capital and you just start pulling the trigger on shit and hoping it goes your way. When it doesn't, you just move your stop. That's not a strategy. That's being lazy because you don't want to do the prep. The prep, right? Sun Tzu, Art of War, the battle's won before it's even fought. That's talking about, I mean, you're talking about a book hundreds of years old. You're talking about the prep. The battle is won in the preparation, the training. That's what I'm trying to get you to understand. This shit should be boring to you and routine because you've homeworked it and prepped so properly ahead of time. And you have a trading plan, you have your rules in place, and you're excited that you go, there's nothing these guys can do to me today that I can't handle because I'm prepped. Okay, stupid little mantras, whatever it is, whatever you got to say. Fire department, wind's in your face, you're in the wrong place. That's the stupidest thing I've ever said or heard. But you know what? You're minding your business at the station, and you get a 50,000 gallon chlorine leak. Guess what? You start saying to yourself, you know what? If the wind's in my face, I'm going to die. You remember your mantras. You call on your training, and that's from prep. They use windsocks from the airport, from the nearest facility, and they give you a wind direction and speed. And you know, man, I need to hit this on the north side or I'm going to die. I'm going to choke the whole crew out. And if you're in charge, that shit's on you. You kill 2 other guys and don't send them home to their family because you can't tell wind direction. You're an idiot, right? So basically what I'm telling you to do is the prep. Nobody wants to do the prep. Everybody wants to make the money. But the money is not made in the market. The money is made in the prep, because there's nothing they could throw at you that you can't handle. You understand? That's what I'm trying to get you to understand in the business. You don't make the money walking up to your machine and clicking the mouse. You get smoked doing that crap. The answer is the prep. Everything is about preparation and knowing what to do and homeworking it. Jim is the perfect example. Jim's been doing homework since I met him, like 35 years. He's been homeworking everything. He invented the WSM viewer for the group. because that was a tool that gave him clarity and helped him understand what he was doing. So by creating the tool and sharing it with the group, he's handing you the same tools to create your prep. But the problem is nobody wants to do it, man. All right. So I asked last week, right, the assignment was send me some trading plan stuff. And I got some really good ones and I want to talk about them. And here's why I wanted to share them and talk about them. Is that everybody has a different perspective or a different take on what it should look like. And that's perfectly fine. It's human. But the thing is, I might show you someone's plan that I found really insightful and good. And it might be like, oh, you know what? I didn't think of that category. That's a great idea. So I'm hoping that you can shore up and issue some process controls on the stuff you're doing by viewing a couple of the plans I thought were outstanding. And a lot of you didn't send them. And whatever, man, I understand you don't want me to be critical of you or whatever, but if you tell me, hey, Steve, don't talk about it, I won't do you like that. I'm not, you guys know me, you've been around me a long time. I don't do stuff like that. I never intend to hurt anyone's feelings or call anybody out. It's not how I run. I conduct myself, I guess is the right way to say. All right, so you should be running several plans simultaneously at the start of the new year, right? I don't care what it is, but of course, the number one thing you should be working towards is handling your business, right? And you should be running some kind of physical activity, some kind of headbanding, spiritual stuff, some kind of relationship thing. I was so proud of a lot of people that sent me stuff about the relationship and they're doing better with their family. And it's when you focus on something, you get it. That's the bottom line. Decided that you were going to cook for your wife or that you were going to rub her feet or give her a kiss every day and you haven't done that in years. I'm hoping it's working out for you. I've seen some people write some emails have come in say, man, you know what? I started doing this. My wife's been happier. I noticed a difference. The thing is that you have to do this selflessly. You have to do it for people around you. Make somebody's day. Somebody like you go to the store and FedEx and you see them on a regular basis. If you shop at Amazon and you buy shit and return it and buy three different things and see which one you like and return the other two, then you're one of those people that probably go to the FedEx drop or the UPS drop on a regular basis. Buy somebody lunch over there, man. Throw them a 20. Buy them lunch. Tell them, man, you're always in a good mood. You made my day. Give some guy on the side of the road begging, give him 20 bucks, give him 10 bucks, whatever. Make his day. Just something rewarding for yourself to make you feel good, man. And you'll start to see the personal benefits of that. It's crazy. All right, so let's look at some of these plans, see where we're at, and help you develop your plan. And then I'm hoping that I get the next batch of stuff coming in. All right, so can you guys see this? It's kind of distorted, it's weird, but it's basically right here. Wake up time, identify what he's looking for. So it's back to here, right? I walk into the office and I do what? Play on my phone? What do you do? Do you analyze the chunking of information in blocks? How do you check things down, right? Develop in your mind or on your whiteboard or on some hard piece of paper what you're looking for today, right? Did you have peak formation high yesterday, right? Day one, then you had a nice move away. The books flipped to the downside. What do you expect? What does day two yield? We know, right? Mild stop hunt straight away. So you're looking for maybe a micro M here. You're looking for some type of pullback into the AR numbers. Okay, so this could be anything, any pair. If this is what you see, then what's the action? The action is I'm looking for AR00. I expect it to not violate the Asian range. And I'm going to take the pullback into the Asian numbers and a break below and push back into the AR0 number. And if the trade exceeds into the 50, then you would aggregate 1 at the 0 and 2 at the 50. An absolute worst case scenario, if you're going 1, 1, and 1 on a 3% risk, you can go 1, 1, and 3 if it hits the top side 0 and then stop out X amount of pips above that line, right? So now I just tied together money management and trade projection and showing you what's the possibilities. You know it doesn't always hit the bottom 0 or the top 0 or the 50. You know that it mixes it. Well, they'll throw a pin high, right, and try to fake you out into going long against a straightaway cycle, right, against the blocked orders. Why do we know that straightaway holds? Because there's some number above the AR range where they consolidated that's blocked, right? It's blocked volume. This shaded area, you should almost shade this area out on the chart. This is a no trade zone because this is an undecided book, right? Where are the possible leaning points? Apex nadir thing and high, right? Blue tracer and apex nadir thing. Those are the possible levels if the Asian range is violated. So now you're tying some technical knowledge into a trading plan, into a money management execution style. Okay, you're just tying all those things together just like that. So now you have peak high. What am I going to lean against? You're going to lean against the AR numbers because we're expecting straight away. We're expecting a micro pattern, a single A frame, right? Spike into the numbers and reverse. And then you could take a little micro reversal off of here if you want that. But this M confirms this M when this leg breaks below the previous swing, right? The book would go from upside to downside behavior, right? Trap traders high, shift the zone below the tracer, right? Trap through below the tracer, maybe pin the tracer up here and come back in. That would give you a box top. How do you handle that? You got the box top, you draw the box, you got your M formation. You can go aggregate 1%, aggregate 2%, stop out up here at 15 pips above on both orders. Whatever that number is percentage-wise, 1 lot, 2 lot, 2 lot, 4 lot, whatever. It's some aggregate of your actual entry. And if you only get the 1% on, then you need to have a plan for downside behavior. If the dealer does hold my level, how do I get the rest of my aggregate on? Right? You come back in here on a retrace with 2%, get the stop out in front of the 1%, you're still at 2% risk now. And then if it moves in your favor, get the stop out in front of both. You got 3% on and you're moving. This is the stuff that you have to do in your head, on the board, on a paper before you get to the terminal. You have to have this mapped out. That's why I suggested trading 1 to 2 pairs, 4 at the max, and you know the behaviors of the pairs. What's a stop hunt in Euro? 25 to 50 pips, more aggressive. GBP, 30 to 50, 30 to 60 on some aggressive days. If the news comes out of FOMC, different animal. If non-farm's there and you don't stand aside, different animal. This is the stuff that I'm talking about. You understand? This is the stuff that I can't do for you. I could draw this stuff till I'm blue in the face and be jacked up on 6 espressos before I come in every night, but it doesn't do anything for you. You got to say, Steve, you know what? I get it now. I finally get it. I've been toying around with this business for the last year. It's a new year. I drew my line in the sand. I'm on. I'm in. Let's do it. Okay. Here we are, almost February. Just the same handful of consistent people send me stuff. The rest don't want to hear from me, whatever. I'm not offended. But the thing is that if you didn't get what you came to me for, I'm giving it to you. My hand is out. I want you to make a change. And the only way to make a change is to just send me a friggin' email. One time. Once we start the dialogue, I'm pretty nice in email. You could ask some of my usuals like Susan and Melinda, and people send me stuff. Rajan, all the time. All right. Okay, where are you at in this stuff? Okay, so back to this. I got to find some glasses. I'm blind. That's one thing about staring at screens all these years. All right, so this guy has basically wakes up 4 a.m., tries to identify the peaks, high and low with levels, chopsticks, divergence, acceleration, and sweet spot, where his anchor's at, his AFP, identify where he is in the cycle. I just showed you an example of that, where you are. He uses 1 hour, 4 hour. Listen, whatever chart you use to see it, it doesn't matter. I've been advocating the 1 hour for a long time. That's my favorite. That's the bellwether, right? You get a directional bias, you get the moving average crossover or re-squeeze. That's a directional bias, right? You get a double top on over a couple day span, midweek reversal. You get a high on Sunday, Monday, and retest on Wednesday, Thursday, Tuesday, Wednesday. That's a directional bias. You can trade, you can lean on that. It's a place for you to place your orders. Okay? So that's the thing, man. All right, this guy's a 3% risk. I wanted to point that out. His goal is 400 pips per month. Okay, that's another thing I've been talking about. How do you come up with that? How does that work? Okay, you take your calendar, right? You take your 4 days of trading. He needs 25 pips net a day, right? Every day. And then he has a makeup day on Friday. If he doesn't reach his goal by Friday, he trades through unless it's non-farm. And if he doesn't, or if he hits it, he's done for the week. He has a 4-day work week. That's the kind of stuff that I'm looking for. This is good stuff, man. Okay, he's using the moving averages, right? Water too close on 1 hour chart, looks for out of the band, in the band, TDI type stuff. 13 EMA, not necessarily below. Trade management, stop loss 10 to 15 pips, trail to break even after 5. His take profits are EMA targets, right? Typical stuff. Why do we use those as targets? Because that's where the dealers know that people have their levels, right? And the funny thing is when you start looking at that book map stuff and stuff that's hidden in the background that you can't see, I can't tell you how many times the 200 and the target, you'll get, I wonder why my ink went away. There we go. You'll have your crossover like this, and price will be behaving and coming back in, and damn if there isn't a block of orders right above here in the book map stripes in the book. And it just happens to line up. So the dealers know it's going there. They know that people trade off of those, right? It's one of those chicken and egg type things. It works, so they do it, or they do it because it works, or it holds. All right, so this is a good basic plan. This is my go-to guy. He always does impeccable work. This is like a college level, and I'm not gonna say anyone's name, man. If he wants to own it and you guys bombard him, that's on him, man. But I wouldn't recommend it. He knows who he is. He's gonna get a million emails from you guys. He just has a very, this is like the kind of thing you would take to a bank for a business plan and get a loan. It's like laid out really nicely. So the ones that have been around for a while can guess who this is. Anyway, right? He's got his check. He's got his tough schedule, right? He trades London session from 3 a.m. till 7. He won't trade those pairs. These are the pairs that he focuses on. He only trades after news is checked and noted. Not be able to trade U.S. session due to work. So he's done. He's got to get going. Starts his day. Right? He does his check around 9 right after this stuff. He looks at his 4-hour, 1-hour time frames to get a direction. Right? He goes to sleep. He gets up. He's got to try to get some rest, get in there. Wakes up 2:45 a.m., looks at the chart, see what's going on. Nothing setting up. Maybe he gets to go back to bed. He writes down on his whiteboard. I highly recommend a whiteboard. They're like $20 on Amazon. They'll be at your front door before you wake up tomorrow. Right? He uses some kind of checklist tracking method, entry trade management, etc. Use the lot size calculator spreadsheet without fail. This is huge, huge thing. Right? Looking for his Mona Lisa, 2%. 2 times 1% trades placed on a pullback, perfect. Aggregating in his order to get a better average entry. Looking for a 1 to 3, goes to break even on 1 to 1. All this stuff is like perfect. This is, if I was going to write a plan, it would look like this. Okay. Harmonics. Okay, look, I want to make sure about the harmonics. Everyone knows this, but the new guys might not. I don't trade fibs. I trade the behavior at the fibs. Guess what? Order book, you get a Batwing, you get a Gartley. There's stripes in the book on those levels. Back to the same thing, chicken or the egg type thing. It's there. The dealers know people are getting in, getting out at those levels. They stripe them. They put the orders in there. They either block it, absorb it, reject it, whatever it is. All right, so I'm going to go through the slides. his exits, using the 13 AMA as a bellwether, as a guide, right? Starting how he manages his capital. This is exactly to plan. This is perfect, right? He's taking his profits along the way, move them to his bank account. That money doesn't belong to you until you get it out of there, okay? Because God knows those dealers are full of it. And we've had some guys make some astounding amounts of money and never been able to get it if you're trading at a substandard broker. And it's a great problem to have, but it's not. It's very frustrating because you beat them and they still figure out how to beat you in the withdrawal process. So that stuff, when you start making some money, just make sure you get some out and make sure they pay and they pay timely. If you start seeing problems, change brokers. All right, important stuff. Okay, his percentage goals, excellent. Profit rules, drawdown rules, all this stuff has to be done going into the market before you do it. All right, category, I mean, I know I think he has a master's or doctorate degree. Very intelligent guy that did this, and it's laid out like a college outline, right? He has his appendixes. It's perfect, man. Okay, the next one. This is my man. He's killing it. So I get letters like this. It makes me gushy inside, man. It makes me happy. I love stuff like this. So before joining, he was 22.5 in the hole from all his Forex stuff. 4 years, 22.5. Taking a few bumps last year and finally adopting one style. I had an extreme amount of success withdrawing most of my 40,000 and making back everything he ever lost in the business. Man, that's amazing. Take a snapshot of that one too, Sean. That kind of stuff makes me speechless. It makes it all worth it. All the aggravation makes it worth it. It makes me love teaching this stuff. So what happened? He got off course, felt good, probably was feeling himself, and he had a few bumps in December, but he got back to honing his skills. And he has a really nicely laid out plan. His plans, he feels it's a little aggressive. So if he feels it's aggressive, then it's probably aggressive. But things are turned around for him. He's got his trading room. What he does, that's exactly the first line. What do you do when you walk in? Well, this guy starts on Saturday. Okay, market's closed, charts are static. He goes in there, no pressure to trade, just hanging. He already knows what he's looking for going into Monday. He marks up 30 charts per day with the win-loss ratio based on signature trades. He's trading ARs, IDs, M's and W's. Second leg trap, TDI stuff, confirmation. He's using 15 minutes to pull the trigger. He manages the trade on the higher time frame. Exactly how I would want to see it done. Okay, he's using the 13 as his bellwether. That's the gold standard in this group. The hours exactly how I'd set them, Monday to Thursday. Friday's a makeup day. You have a non-farm usually, right? So you know that week, no matter what, you're probably not going to do any makeup. He has a total of 10 trades to shoot his shot for the week. Okay, that's pretty awesome. So he has to average 2.5 trades during the course of the week, a day, right? So he knows he's looking for 3 trades, 2 to 3 trades a day. If he has a day where he only gets 1, then the next day he's got to get 3 or 4 to get his aggregate in, or he's got to go 1, 3, 3, and 3 over his 4 days. But this is the thing is this is something you can map out. You could get a calendar and you could sit here and you can go, all right, man, I got 4 days and I got 1 makeup day. I'm looking for 2.5, 2.5, 2.5, 2.5, right? And in real numbers, you got to look at maybe a 3-day. A 3-day is a 6, and then 2 and 2. If he's head of his average, right? If he gets Monday and Tuesday, he's up 6 trades, and he's got his ratios where he need them to be, then he's just looking for 2 and 2. Or if he wants to be done for the week, then he can do 3 and maybe shoot 1 right before on the last day and be off. This is the kind of stuff that you can map. This is the kind of thing that if you don't map it out and have a plan ahead of time, you'll just keep taking shit and sit there and blow yourself up. And it happens. I get emails like this all the time, man. And then the first thing I do, you guys know this already, digital footprint. You can't lie to me. I know how many hours you're in the forum, how much time you spend on the stuff, how many videos you watch, where you're at, what you've done in the DMR. Digital footprint. Put your name in the email. First thing I'm looking for, where's the plan I asked you for? Where's your block trades? Where's your 30 trades assessment? Stuff that I asked you for. Don't have it, then you wonder why you're blowing up. The problem is you just want to trade. You need to do the work. You need to do the block trades, the assessment, run it through. We'll put it in the spreadsheet, show you what's possible, show you what's realistic, show you what's off the charts, because both of those are attainable if you just do a little legwork. All right, he's risking 5%. This is a little aggressive, and it's fine. Okay, as he gets into the bigger numbers, I'd like to see him scale back on this. Obviously, he's got 40 grand. Maybe he's approaching 100 by now. Who knows? But as you get higher, you need to start scaling this back a little bit. And that's okay because you're going to still make money, especially if you're using the spreadsheet. All right. He's got good, solid rules. When does he come in the office? His trading desk. I love this. This is 10 minutes to 2 Central Time. So it's 10 minutes to 3. Right? He allows himself to take trades during these hours. Good stuff. 2-to-1 risk to reward. 2R. Perfect. US session is a little less, but on aggregate, he's good. He's using CAR's higher time frame principles. Okay. That stuff's been around for as long as CAR's been around. Fantastic stuff. Why not take something that is proven in the group and has been around for years and do exactly what he did? He adopted it or adapted it, whatever the proper terminology is, to make it usable in his mind and comfortable with him. Whatever that looks like. You take his rules and you go, you know what? This resonates with me. I don't like rule 4. Whatever. I don't know what rule 4 is. I'm just talking. And you just adapt or change rule 4 to be more in line or congruent with your personality and to be something that resonates with you. That's the thing. You got to get uncomfortable. You got to get comfortable being uncomfortable, right? It's typical saying, first of the year, everybody says this stuff. But you got to get comfortable with stuff that you're not comfortable with by doing it, repetition, homeworking it. The time to make the decision is not when the trade is moving against you. It always comes reactionary, and it always does not end. It ends crappy, man. That's the bottom line. I didn't say the S word. I'm trying to be better, believe it or not. You gotta do the prep. I can't stress that enough. The biggest problem in the business is not doing the prep because everybody wants to join up and start making money, and it doesn't work like that. Most of his trading will be automated. You know, I'm a huge fan of this. He's using the scripts, the SM long short scripts. They don't work at every broker. And you guys know the guy that coded that passed away, and there's a whole thing going on with that. So if they work for you, great. If they don't, there's nothing I can do about it right now. The guy that coded it for me passed away, and he passed away with the code on his computer, and he was supposed to send it to me, and it was one of those things, man. What do you do? You know, nobody expects to not be around the next day. So he's using RSI, his M&W, his ammo. He's calling his trades his ammo, right? 5,200 cross. This is all the stuff we've been talking about for years. You understand? It's nothing new. He just did it. 5,200 cross. Right? Let me take my ink off of this. Make sure you guys get pictures of it. Okay, he's going to break even at 1-to-1. And he's trying to get 2-to-1. Right, he's looking for POMA, fanning, right, different things. I did not invent the term, but it means perfect order moving averages. So when the averages are perfectly lined up, right, they cross and they stack beautifully, right, the higher time frame, and they just, all the colors are fanning in a perfect order. They call that POMA or fanning, right? And then what you'll get is re-squeezing and continuation, right? If the higher time frame squeeze, then it probably violated these, so you should be out. Then you can look for a re-entry. Those are basic things you should know ahead of schedule. His bread and butter trade, 1350 cross, left of the structure, right? That means you got to get a crossover before it happens. So, right, if you divide it, set up, lead in, pre-structure, right? Set up, lead in. Been talking about this stuff forever. What's your lead in? What does the chart look like? Right? Has to be to the left side of the structure. Then once these things are present, then you're looking for the trigger. Simple. Set up, lead in, trigger. It's a 3-step process. Right? AFP, away from peak, AFP, anchor, flip, pull. Looking for the anchor, the flip, the pullback, if that's the style you're using. Right? Anchor being high or low of the day, the book flip breaking the apex nadir thing, and then the pullback into those levels. Right? Safety the next day, pull back into the AR numbers. Same thing, but you have to apply it and know what you're looking at. Okay, if you're struggling and been with me a little bit, then I suggest you strip it down to one trade, man. One trade and one trade only, and become fantastic at the one trade. That's what I'm looking for. All right. You're in a business. If you haven't taken the time to write this out, it's not too late, man. I want something from you guys. I want you to send me something. Okay. Is there any, okay, we got about, I don't know, about 5 minutes left. I got some charts I want to look at. We'll look at one or two. But here's the thing. Is there any questions you want to ask that I missed? I'll specifically, I don't like to pay attention to the box when I'm talking. It messes up my chi. Just ask me now, man. I'll look at it and see. Okay, your mails don't reach. Okay, so I could tell you right now that if you're sending from a Hotmail account, that's a problem. Yahoo and Hotmail, problematic. Yep. Why don't you open up a Gmail account just for the business? That's another suggestion, man. Gmail, I mean, everyone knows Google pretty much owns the internet. Why not something, it's free, open up a Gmail account just for BTMM in the group. Tell me, hey, Steve, this is my new email address. It's so-and-so. I'd love to help you. Okay, Joel, I heard you say on the video once they did homework 5 years of charts. Yep, this is the deal. And by the way, the first person ever hand me a thumb drive with an ungodly amount of charts was Carr. So some of you don't know my story, but I was at OTA teaching because I wanted to delve into the teaching side of the business, and because I thought I knew more than everybody else. Maybe I do, maybe I don't. Still yet to be decided. And Carr was in my first day, in my first class, and me and him just clicked, man. We resonated together, whatever. But my first day of class is epic. Carl will tell you, I took their textbook and threw it in the trash. The first 5 minutes of the class. And guess what? I got terminated. So it didn't last very long. Anyway, yes, so here's what I did. How can you do 30 years of charting? Go back 5 years, 6 pairs, and get a feel for it. Get a feel for the behaviors. When you do that, you'll start to say, you know what? I like the way this euro moves. I like the way Australia moves at certain times of the day. So some tips for that. mark the charts in the block when you're going to be trading, okay? Don't mark some Asian range stuff unless you're going to trade Asia. Try to mark between the shadows, right? So I always talk about either mark from the end of the Asian range into the US shadow if you're a London trader. If you're a late London trader, which I recommend, is mark from shadow to shadow, and that would be your hours. Right? So go back. You don't have to do 30 years of charting. You could do 10 years of charting. Go back on 2 pair, go back on EU and GU for 5 years on each chart. It used to be easier to do. You used to be able to go into MetaTrade. I don't know if you can get the data anymore. I haven't messed with it in a while. You guys know I moved away from that, and I'm using Ninja. But TradingView is good. It's free. Ninja, go in those charts and pull the data back for 5 years. You might have to download the data packets. Okay? Pull the data, roll all the way back, and go bar by bar. That's what the WSM viewer is for. You can get a massive amount of experience in a short amount of time. That's the only way to accelerate your experience in the business, is to mark charts. Done historical charts, because it takes hours for this stuff to develop. You got to wait for Asia to print. You got to wait for the breakout, false move, M or W formation, and then into the setup. If you're trying to get knowledge, you have to go back and mark a massive amount of charts. There's no other way, man. No one likes to hear this, but that's what you do. I got guys that are doing it. My buddy Morelli over in Hawaii, he's doing it now, and he's starting to have some success and seeing things. It takes work, man. Bro, I don't know how to pronounce your first name, man. That's why I'm calling you the Italian name. So if you want to like send me an email, like and like put like the little marks from school. Anyway. All right, man. I guess one chart. Can't help it. Yes, one day at a time. Okay, so this was sent to me in a zip. Pretty great stuff. This is the kind of homework, Mark. What's your trade? What are you looking for? Okay, so look, basic stuff. This is Bookmap stuff. This is Bookmap stuff. But let's use the lead in. What's the lead in? All right, he's coming up on the pound. He's got absorption, book flip, right? Here's rejection, pullback. There's a micro W. That's a trade. Into the third level high. End of day, out. Okay, now we got peak formation, right? Right, these are all the Bookmap terms. He's got capping, pressing, absorption. Love this stuff. Low volume nodes, squaring the book, right? SQ squaring the book, absorbing, pull back into a square. This is dealer stuff that we've talked about on, if you're new, don't let this stuff get you down. All right, if you send me these charts, I love them. Thank you. I'm talking to you. Okay, so what does he have, right? He has his lead in perfectly. What are we expecting here? Let's call this day one peak formation high. Day two, we already know what's going to happen, right? You got your AR trades. The book flips to the downside. How do we know? When he breaks below, you get stopping volume, capping, a press into higher levels. You're drawing this box here. You get your 1-2 touch. This is a sell limit or an entry here. Perfect. Little pullback. Don't get scared. It's squaring into the low. If you're not out, trail your stop. You're done. Okay. And then we're going back the other way. Here's the flip. You aggregate over the pins. Break above. Book is now long. Anchor low. W. Looking for a pullback. Refine the entry off the pins over here. There's your entry. If you're taking that. Boom, boom. You're out. End of day. Into the next day. The same stuff over and over. Right? I know I go through it fast, but that's why it's recorded. Okay? Look at this stuff over and over. Squaring. Dealer breaks above, low volume pullback, square the book. Right? Low volume pullback to square the book. Right? If you're looking at volume bars, you should have a delta divergence, meaning that the previous closed bar will start to lean off in volume as price moves higher. Divergence. But this would be a delta divergence, which is the delta is the net change of the bar in volume over time. So if you got a 5-minute bar, the delta will start to wane off, the delta being the net buy and sell orders inside that bar. Bookmap stuff, all right? Advanced stuff. If you're new, don't sweat it. It's in the recordings, and I'm going to cover it again. Okay, so your net delta might be, if the bar paints green, if this volume bar paints green and you don't have access to the book, the net delta might be like 1,000 orders went off and you have 600 buy side and 400 sell side. So then the net delta would be plus 200, the difference between 4 and 6. Understand? So the net delta. Then if the net delta starts to wane and price is moving up, you get the pullback, price will start moving up. That's a confirmed delta or order flow entry. You don't need all the tools. You have to understand it. If you understand the pattern, right? Notice how this is a push and a rejection, and this is a pin. That's the difference. This is a delve into lower levels and rejected by the dealer by absorbing the delta and holding it off. And then what happens is this jumps over, and this bar will have a point of control, a high volume order traded above this previous swing high. It's all bookmap stuff, and I'm going to talk it and teach it again, but might as well hear it for the first time tonight. All right, man. I got to cut myself off. It's 8 o'clock. I don't want to keep you guys longer than I'm supposed to. Everyone has lives to get back to, and I could ramble about this stuff for weeks. I will pick this stuff up next week. Proud of you guys that sent it in. Listen, if you're having email problems, if I haven't answered you, I am caught up. I went through my spam box. I went through everything. Open up. If you have Hotmail, even Hotmail and Yahoo, the biggest problems, they fail. And part of that too for the DMR. So when we do this re-registration, thank you, Vinesh, always, brother, appreciate it. If we do the re-registration, why not open a fresh Gmail and give me a brand new email address, especially if you're not getting the links. And if you have communication issues with me, I apologize, but let's get you switched over. Let's put an end to that garbage right now. Let's end it, and let's get you going on the right path. David, nice to see you, brother. Appreciate you guys. Emmanuel, Kevin, thanks, man. Ed, appreciate it. Yeah, if I'm not writing you back, there's an email issue. Please switch over and let's get you on track, man. All right, Melinda, thank you. Nice to see you. All right, man, let's end this. Good night, guys. Have a great night.